President Trump is hitting the road again, this time in North Carolina, with a clear message. 2026 is going to be an economic boom year. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Brenberg, and with us for the hour, Forbes Media Chairman and Editor-in-Chief Steve Forbes himself. Great to see you.
See you. Thank you.
So the president says everyday prices are finally giving Americans some breathing room. Egg prices down double digits. Dairy and butter are cheaper, and real wages, after years of declines, are now up about 1% since Trump took office.
Because of tariffs, we're taking in billions and billions of dollars more than we ever have before. With no inflation, by the way, with no inflation. You saw the inflation numbers. They just came out today. What great timing. Practically no inflation. And yet we're taking in hundreds of billions of dollars.
The White House says that this isn't an accident or a coincidence. Trump credits tariffs for bringing in hundreds of billions of dollars, as he said, arguing that they're boosting domestic investment without reigniting inflation, despite what experts said earlier this year. So the pitch is really simple. More tax relief, more jobs, and more money staying in the pockets of American families. Steve, after his national address at the White House the other evening, we get that inflation report yesterday, came in cooler than expected, 2.7%. The naysayers are all saying, oh, well, you can't trust that report because of the government shutdown, rather than just acknowledging the inflation boogeyman never came.
Well, a problem with the president is, and hopefully the new year will solve the problem, is that as we go to the supermarkets, a lot of things are still going up. Prices are still high in a lot of areas. People still don't feel good about housing. They don't feel good about health care. They're wondering whether they should send their kids to college. So it's pretty much of a headwind. However, I'm old enough to remember back in the dinosaur age of 1982 when Ronald Reagan was in office.
Tell us about it.
Yeah, well, woolly mammoths were around too. But Reagan had headwinds, and then it turned to tailwinds when his program kicked in. Now, a couple of things the president has to watch out for. One is the Supreme Court, I think, will rule against him on tariffs.
Okay.
And that actually would be good for the economy, even though he won't like it. And by the way, those Patriot checks will still go out. And the other thing to watch out for, other than what's happening overseas, is the Federal Reserve still believing that prosperity causes inflation. So he's going to appoint a new chair. I think it'll be Bessent. And I think Kevin Hassett will go to the Treasury Department, and they've got to get the Fed off this idea that prosperity is bad for the economy. So that'll be a big battle. The dollar is weak. And one of the things I wish the president would do is firmly say, we need a strong and stable dollar. Stop this talk about a weak dollar helps the trade balance. Just remember, George W. Bush tried that, and we saw the consequences.
Real quick before we move on, do you think we're poised for this Reagan type of boom that the president is describing, the way the policies have been laid out? Do you think it materializes as he is promising Americans it will?
Well, the cash flows of corporations are huge. Even though there's a corporate minimum tax that was slipped in several years ago under Joe Biden, the cash flows are still very positive. So if people can have some confidence that things aren't going to be changing again, yes, they will be investing. And the thing is, if you have a stable dollar, one of the other things, of course, it's Christmas time, so you always hope for presents, is another reconciliation bill where they cut the corporate tax rate down to 15, as he wanted to do, cut the capital gains tax down to 15, and cut personal income tax rates, especially for middle income brackets.
Okay.
You do that, and the economy's going to be good, and the memories of this December will go by the boards, including the New York football team's just a bad memory.
It sounds like we have some stocking stuffers that we can look forward to. Just on the military dividends, it sounded like in the address that those were coming from the tariffs, but my understanding is actually it's a reallocation from part of the defense budget, and that they can do that. So if the tariffs were to be struck down, I'm not necessarily sure what the court would say about what would have to happen to that money, if it would have to be returned in some way. It's very complicated, but that's why it wouldn't impact those military dividends, which I think is an important point.
Yeah, I like that they disconnected it from the tariffs. Like they're going to do the dividend. They've got money set aside that they can use for that. That's great. I like the dividend. Steve Forbes, only you could come up with a Christmas gift of lower corporate tax rate. That is so on brand for you. I just love it.
Uh-oh.
Can I argue a little bit with the idea of the headwinds versus tailwinds? Mm-hmm. I feel like the president's got more tailwind than headwind going into 2026. Inflation is, you can argue with the number we got for November, but it to me looks like it's moving in a good direction. Jobs picture, I think, is a little messed up because you have the immigration issue.
Sure.
But I think that might be moving in the right direction. You know, the tax policy is going to have us moving in the right direction. So I look at all of that, and I would say 2026, he's got tailwind. Sail with it. Don't get in the way of that. You know, tack, or I'm not a sailor, tack or whatever you have to do to use that tailwind. Don't introduce new uncertainty. But I feel like the president's got a good tailwind, and that's why him getting out on the road and talking about this is timed very well. Mm-hmm. If it was a headwind and he was out here doing this, I think his message would fall flat. But I think it'll have some resonance.
Yeah, I think the headwinds are about perception. You can say the numbers, like wages are starting to move up again. People still don't feel they're on top of things. The tax cuts on tips and overtime and things like that, that'll help people who are struggling from check to check. So reality has to catch up to perceptions, and people have to feel, yes, things are going in the right direction. And so, yes, in that sense, he does have the tailwind. Mm-hmm. But he also, though, I think has to reinforce the dollar, reinforce getting a new big tax cut, because the tax cuts were primarily focused, avoided a big disaster, $4 trillion disaster tax increase.
Yep.
But also, though, we need more juice, you might say, for individuals, corporations, and for investors, capital gains. And one of the weird things is why the Republicans have such allergies about cutting the capital gains tax. They're always going to be accused of helping the rich, even if they do nothing. So they're always going to get that accusation. The nice thing about cutting capital gains taxes, it instantly raises revenue. Immediately. It's an immediate, you don't have to wait 2 years or 3 years or for headwinds and tailwinds and all that kind of stuff. Does it from day one.
Okay.
Something else that we're anticipating is that we'll probably see lower interest rates next year too, Dagan, because if you have higher inflation, the rub there is if you drop rates, then you have an inflation problem. So now the Fed, it seems, can focus on the labor market. If there's trouble there, it can work to try to sort that out a little.
Will we have lower long-term rates, though?
Right.
Because if the Supreme Court overrules these tariffs, it is going to be a problem for the bond market and longer-term bonds, because we are, and like it or not, I never thought the tariffs were inflationary. They're a tax, they're a sliver of a value-added tax or a consumption tax. Mm-hmm. It's already baked in. Now that it's been kind of baked into our cake here in the United States, that we've learned to cope with it, even businesses and consumers, and year over year, the numbers are going to start looking better. But we're paying $100 billion on average every month in interest on the national debt. That is not coming down. That's just in the first 2 months of the fiscal year. We brought in about $200 billion in tariff revenue for the full fiscal year. So that covers 2 months of the interest on the national debt. And when you have a half of American federal taxpayers, the bottom 50% only pay a net $50 billion annually in income taxes, that you do need that revenue, like it or not, because this Congress is not cutting anything in terms of spending. If anything, from this White House, we keep getting demand stimulus. I have no problem with the 1776 checks for U.S. service members, the warrior dividends. That actually came out of money that was allocated in the one big beautiful law that was passed. Right. It was the part of from the military housing funds that Congress supplemented with about $2.9 billion. So, but it's bailout for the farmers, the kitty checks and the IRS, the IRAs that they've handed out.
Don't
What
knock
else?
my kitty checks.
Well, you know what? We borrowed that money to hand out money for babies. And are we going to get checks for everybody in this country? When did the Republicans stop being supply-siders and start juicing demand? Just like the Democrats do, Steve, because that's where we are. So if the Supreme Court takes away that little bit of money that the government is raising in revenue from a VAT, look out, because your long-term interest rates are going up. And by the way, one reason inflation might be coming down is because the unemployment rate is at 4.6%. Same thing for oil.
Because when
The economy is slowing,
Right.
and so that you get lower prices or lower consumer inflation.
Yeah, well, in terms of the tariffs, even though they only 200 or 300 billion a year, that's like putting spinach on a chocolate cake. We can do without them.
I don't advise.
But in terms of the revenue, the only way you're going to get real revenue is with a booming economy. And that's why you have to reduce tax rates. Ronald Reagan showed it. We showed it after World War II, when we had a debt far bigger proportionally than we have today. We did do a big change in the income tax, which cut taxes for most households. We did cut spending then, but we also made changes in the labor law, like what they called the Taft-Hartley Act, which undid the damage that Roosevelt did to the labor force. So we did some good things, and the economy boomed through the 60s, 50s, and 60s together. One of the most prosperous periods in American history. So create the right environment. Reagan did it again in the 80s, and wonderful things happen. But to think that tax increases will reduce the deficit, it'll hurt the economy. And any save. And by the way,
that's what the Trump administration is crowing about. Scott Bessent is crowing about the deficit shrinking this year, and it's because of the tariff revenue. Sorry, Taylor.
No, love it, love it. I come, Jackie, maybe with some mixed news here for you, some positives and some negatives. I know, don't kill me. I'm going to quote the University of Michigan sentiment, but, wait. So I know that it can be volatile and biased. All of that being said, I'm still coming with the data.
Ohio State would agree.
Well said. You know, I'm a Harbaugh fan, so maybe I'm on the Michigan side this time. Okay, University of Michigan, December sentiment climbs 2 points, but below expectations. Good news and bad news. Current conditions slides to a record low. Current conditions. But gauge of expectations, a 4-month high. So I don't like how I feel now, but I'm excited about how I'll feel in the future. That's some good news. Now, consumers do expect prices to rise at an annual rate of 4.2%, but that's a 1-year low. So inflation feels high, but it's lower than what it's been. And I think that is today sort of sums up in a nice bow. Don't love how I feel today, but excited about the future. Speaking quickly of the future, would never argue on weak dollar versus dollar strength. But the only good news about weak dollar, it does boost corporate profits because you're translating. If I'm a multinational and I have a balance sheet denominated in dollars, if I get a lot of revenue overseas, when I translate that foreign currency back onto my dollar-based balance sheet, I get more dollars. So it is sort of this one-time artificial, but it is a boost to profits. So if you are sort of a big company in the S&P 500, that could be a tailwind next year as well. We've gone from a 110 to a 98 on dollar.
Okay. And, you know, that's what I was going to say to you is you're just watching this market. If you separate the market from the fundamentals of the underlying economy, people are still excited about buying stocks. We're near record levels, and the anticipation, the expectation, if everything materializes the way the president says it will, is that people will continue to buy next year. But you're also looking at Nike.
Who's shopping at Nike?
I did.
Okay, what'd you buy?
I actually shopped at Dick's.
For Nike products.
Yeah.
Okay, but you bought a swoosh product.
I bought I can't say because it's a gift.
Is it a gift for me?
No. But it's a gift for somebody who might be watching.
Okay, well, you might be one of the only few people who are shopping there. The shares are down 10%. Here's the problem, you guys. The China business is the problem. 6 straight quarters of declining sales in China. Sales fell 21%, and China makes up 15% of the company's revenue. Big margin pressure, 300 basis point decline. That's 3% drop in margins. That hits the bottom line. Here's what they had to say about how consumers in China feel about Nike. Nike products, this is from an analyst, they feature the swoosh. So it tells people what you're wearing, but all of those higher end products are out of style. Compound this with the company's missteps in design, and you get this quarter's results.
Okay, I can comment on 2 things there. Number one, I've said before, I used to love Nike, but now there are such better sneaker options out there for fitness that I find their shoes to be a little stiff and not so great for my feet as I'm trying to exercise. So I have personally stayed away from them. But I also lived in China back in the 90s where Nike was all the rage. And the Chinese consumer is definitely shifting. So I think it's going to, I'm not surprised to hear that it's having an impact on brands like that.